Hey everybody, it's Mark Yegge. Welcome to another weekly market update. Today is March 31st. God, the first quarter is over already. I can't believe it. March 31st, 2023. We got another market update and things are looking pretty good. We're coming out of a yellow market and about to turn green. Let me show you what I'm talking about. Just got off a wonderful mastermind call with my gang in the Cashflow Machine Mastermind program. Had a really healthy debate today about in the money or deep in the money and all these other things. Really good stuff. But you could take a look at this market and you can see we got 3 out of 4 green lights and we're getting ready to get a 4th light. So that's all showing that we're going to go green here probably Monday, maybe Tuesday, unless we have a bank failure or something crazy over the weekend. And we are going into a short week next week. So remember, Friday, the markets are closed. So you'll have to close out your positions and things like that if your expirations are next week. All right, let's take a look at the NASDAQ. Look at this. This is a weekly, pretty healthy chart. 4 weeks ago, it went golden cross, which is that red line crossing through the black line, the 10-week moving average, crossing through the 40-week moving average. And so you're seeing it go up 3 weeks in a row of higher highs and higher lows. So that is basically a definition of a trend. So could we have an uptrend starting? I'll tell you what, I think we might. And I think we're just continuing this bull market that we started earlier this year, I think January 9th. We had a little bit of a down. That always happens. And now we're back into this trend. You can look at that trend from the end of last year, and you can see the market's been up, at least in the NASDAQ. And there's been a flight to technology as these banks have been failing because people think that Apple and Microsoft and all these companies are quality. And they were pretty beaten up last year too. And so as things start to improve, you're going to see these markets start to continue to trend higher. And that's what we're getting right now. So that's what I see in the technology segment of the NASDAQ. Over on the S&P 500, I see a similar thing, although we did come down and test that 40-week moving average, the black line. And now we've broken back above it 3 weeks in a row, of higher highs and higher lows. And what that is telling us is that the people don't believe that the Fed is going to raise rates anymore, or at least they're going to pause, or at least there's going to be some reduction in what they tell us is inflation. I still think we're in a very inflationary environment, but I think the Fed's going to basically let data pause it. And that's what the market is thinking is like, oh, if they pause, that means they're going to be pouring money in. Well, on one hand, the Fed is raising rates over here. On the other hand, they're pouring money into these banks to shore them up, because if they get a bank run and people start pulling their money out of banks, the whole system around the world is going to collapse. And the Fed knows that. And the Fed is trying to prevent that. And they've done a fairly good job so far. But I think we're just in the first inning of the bank problems that we're about to start having and the monetary problems that we have in the global market. It's like we're over leveraged by like 20 to 1. And so if there is a run on any of these banks, and it becomes systemic, like we had a problem in Credit Suisse. We had a problem in Deutsche Bank. We still have a problem there. We had a problem in Silicon Valley. We had a problem in Signature Bank. We were having problems, First Republic. There's issues. There's cracks in the armor here. So you got to watch out. But that all means in the market, when things are bad and there's problems with banking and they throw money at it, that's good for the market. That's a long way of saying that's why I think the market is in a bull run right now. So let's keep it going. So that's the S&P. The Dow Jones looks pretty good too, very similar to the S&P, coming above that 200-day moving average, that 40-week, and now testing the 50-week or the 10-week moving average, that red line on that chart. So that looks pretty good. If it could stay above here, and it looks like it's going to hold it today, we need a couple more weeks of continuation for that. And then this is the New York Stock Exchange. This was like pretty lousy performing because it is bank laden and it is oil laden. And both of those sectors were down over the last 3 or 4 weeks. And now they're both kind of showing some strength. So when all the markets are showing you similar things, that's confluence. Confluence is strong. That means there's lots of different constituents basically saying the same thing. So when we look at what's going on in the market, keep an eye on that. And here's the last thing, and I always talk about the VIX, but it's really important to look at. The VIX is just way down, and it's just trending way down. And since it's trending way down, it is showing that the market wants to go up because there's less fear in the market, and that's what that's all about. So listen, I want to thank you for being here. I want to wish you a happy weekend. We got an Easter weekend coming up next weekend. So I'll be early by saying happy Easter, but have a great weekend, everybody. And I'll see you next time on the next weekly market update. Take care.